Well, hello everyone. We are now officially live and people are starting to join us here. I want to thank everyone for joining us for the January desktop time, which hard to believe it's the beginning of a new year, and as Seth reminded me last month, it's the beginning of a new decade. That is really overwhelming when you're an old guy like me. But anyways, couldn't ask for a better panelist group today. We have Candus joining us again, Candus Kampfer, and we're also going to have Jamie talking a little bit later about ComplyRight. So we're very excited to have both of them here. Someone's already saying aloha from Hawaii. I don't even want to hear about Hawaii right now, okay? If I'm not there, I don't want to know about it. So California's pretty good, though, so I have to say. But anyways, very excited to have you here today with us. Later on, we'll announce what we're doing next month, but we appreciate everyone joining us. And I am going to go ahead and, as I normally do, introduce both of our esteemed guests today. And I would also like to mention once again that we are sponsored by this company back here, QBox, which we don't talk about because we don't want to get in trouble. So, but if you're looking for something to share desktop files, check us out. That's all I'm going to say. So otherwise, we're the sponsor of Desktop Time. Again, this is a forum for folks that just prefer to stay on desktop for whatever reason. This is a safe place, and we hope to present to you some options and ideas that will help you to utilize desktop in your daily financial practices and integration even with some other apps. So thank you very much for joining us once again. We're happy to have you here. And without any further ado, I am going to read our bio from our website for Candus and also for Jamie. And Candus, from our website, Candus says as a little girl, her favorite toy was her very own cash register, and she loved helping her parents with their trucking business. Her love of business carried into adulthood, and Candus found herself managing the payroll and bookkeeping for a very large company. Candus decided to leave the corporate world to work with entrepreneurs like you who desire to grow a thriving business. Over the last 13 years, Candus has grown her YouTube community and worked directly with hundreds of business owners and entrepreneurs teaching the ins and outs of bookkeeping. Her direct and encouraging teaching style helps keep things simple while instilling confidence that QuickBooks is possible. So thank you very much, Candus, for joining us today. And we also have Jamie with us from ComplyRight, Jamie Lazat, and she's the HR and Tax Compliance Solutions Manager of ComplyRight and a provider of cutting-edge compliance products. ComplyRight is in programs for businesses. Jamie began her career in HR in 2007 as an HR manager at a small accounting firm, and she's passionate about compliance and its critical importance to businesses. She transitioned her expertise to product development for ComplyRight in 2010. And during her career with ComplyRight, she's both managed and developed various tax and HR solutions. In her current position, she's focused on developing next generation products to replace traditional paper-based solutions, as well as educating businesses on compliance topics, helping them to navigate those always changing laws and guidelines. So again, thank you very much. Welcome you both here. You'll notice that Jamie, we don't see her picture there. You saw it on the website. If you went to the website, you saw it there. But Jamie, when we get to her, we can of course hear her, and she's going to share her screen and provide some more information about ComplyRight. But without any further ado, I'm going to turn the floor over to Candus once again, and she's going to talk to us about QuickBooks and some of the services that she provides. And I think you said you were going to talk today about credit card processing.
Yes, entering credit card charges. So thank you for having me, Chris. It's so fun to be back. I think it's been a year since I was here last.
I actually was looking at the calendar. It's 1 year ago today. And you are the cause of these headphones, just so you know.
has everybody been happier? Hopefully.
Yes, they have. Everyone says I echo everyone, so you were right, but doesn't mean I'm happy about it. So.
Oh, that's so funny. So I'm so glad to be here to help with desktop time. I love the desktop version. And so for me to get to come in and help you guys learn something about QuickBooks always makes me happy. So today I'm going to be sharing my screen. I thought about what to teach. So last time I was here, I spoke about how to get started with QuickBooks and understanding which features to be using. And that's actually something I teach often in my workshop. So I thought, what could I teach? What could I do that was different for you guys today? And I was actually at lunch with some of my friends last week. And as soon as lunch ended, they're both entrepreneurial women that have their own businesses. They're like, I have a question for you. And the first one came up with credit cards. And it is the #1 question that I get asked on my YouTube channel on a regular basis. People, no matter how many videos I create, it's always a common question. So I thought, what would be something good to teach? And so I think that's what we're going to cover today. So I'm going to share my screen because I like to teach live. So let's just get in. So I want to talk about, well, first, let me know in the chat, like how many of you are having a hard time with your credit cards, and are you making sure you reconcile them enter them on a regular basis, let me know. I'm a person who likes to sit in the chat, so this is going to be very interactive. Make sure you're chatting with me. So first, it's about what I want to talk about is actually entering credit card charges, not collecting payments, but when you use your credit card to pay others. So I don't think anybody's said anything yet, but I'd like to know. Yes, Lori says yes. Okay, cool. So let's start with the basics. The first thing to know is when you are going to start using your QuickBooks, for your business credit card, the ideal thing is to have a separate credit card from your personal credit card, a business credit card, the easiest way to track it in QuickBooks. We'll talk a little bit about the bank feed and how to use it, but mainly what I want to focus on is the fundamental understanding of how to use and enter your credit card charges. Let me know if that sounds good. So we're going to go under List Chart of Accounts. The first step, if you've never set up a credit card, is you're going to go under Account, New, and you're just going to select your credit card and click Continue. And then you're going to choose the name. Now, if you have more than one credit card, I highly recommend credit cards and bank accounts to enter the last 4 digits of the card number so that you can find it easily. So let's say if you have Bank of America and the card is whatever, we're going to make a card number up, and then you hit Save and Close. And that's how you add a bank account, a credit card. It's asking me if I want to do bank feed. I'm going to hit no. Now we have a credit card set up in QuickBooks, and we can start entering charges. I'm going to teach you how to manually enter charges because I don't recommend doing the bank feed first if you don't understand what you're doing, because you can kind of get things in a mess. So in QuickBooks, as you guys have probably learned, there are like 3 different, 5, 10 different ways to always get to the same screen. So if you go under banking, you can enter your credit card charges here, or if you're a home screen user and you prefer that, you can actually go down here and enter your credit card charges. So let's just enter a couple together to get started. So you're going to choose your credit card. So as you can see, this is my QuickBooks sample file. It's my training file. So I never know what you're going to expect in here based off what questions somebody asked me. But the one we just created is right here. So Bank of America is here. Then what you're going to choose is at the top, you're going to either pick purchase or refund. And some of you probably are already using this feature, so you're pretty well. The one thing I'll tell you that I learned is be really careful and pay attention. The benefit is that they change the color, because especially if you're entering things manually and you're just like in the go and you're like enter, and you forget to pay attention after you entered your refunds, you'll accidentally start possibly entering your purchases in the refund screen and messing things up. Let me know if you've done that before. Don't ask me how I know. I've done it. I've learned. So you're going to go ahead and enter your charge. So the way you're going to do that is the first thing is you're going to pick who did you spend money with. So one of the things I like to teach always on my Getting Started QuickBooks workshop is that vendors, if you're brand new to desktop or QuickBooks in general, are the people and places you spend money. So when you go to enter your credit card, because people often say, when I go to add, it asks me, is it a vendor? Is it a customer? Is it an employee or other? What do I select? Do I select other? If it's anywhere you're spending money, it's going to be a vendor. So let's just make one up. We'll do Exxon. I already have Exxon set up, and you'll see it's a vendor. And then you're going to enter in the date, whatever date your transaction happens. So today is what, the 15th? Can't believe it's the 15th already. Like, where is the year going? All right. And then if you have a reference number, you can enter that, but you don't have to. It's your choice. Then you're going to enter in the amount. Let's just say we spent $50 on fuel. You can put a memo if you want to. Otherwise, you're going to go down to the expense tab. And this is where people start getting confused with their credit cards. This here is where you want to see. It's considered the chart of accounts. It's where it's going to point on your profit and loss. Does that make sense? So you say, okay, I went to Exxon. How do I want to see that on my profit or loss? Well, do I want to see it as fuel? Then you would pick fuel expense. If you went somewhere and you have multiple different expense categories that you want to break it out to, you can have different line items. If you want to do it towards a job, so you can bill it out later, you're going to choose a job. And if it's billable, or if you're using classes, you can add that detail. That makes sense? We're going to keep it simple today. All right, so again, click Save and Close. I'm not going to use classes. And you would go through and you'd enter all of your charges on your statement. So I'm going to quickly add one more. Let's do like a Home Depot. I see a chat, so let me see what the chat's asking. What is the memo area for? Great. So the memo, hi Susan and Sharon. So what the memo for is if you want to add the detail and you want to see it on a report later. So like if you want to pull a report and you want to go back and you want to look at, say, where you spent your fuel, that $50 that we just entered, and you had added a memo, it would show up right here. See that? A little memo spot. So it's just a way for you to track more detail on your transactions if you want to. Okay, so let's add another one. We'll do like 200 bucks and we'll just buy some job supplies. You see I went a little quicker this time because we went through the basics already. Save and close. So you're going to go through and you're going to enter each of your transactions. Now, when you are done, what is the next step? You're going to process your credit card by reconciling. You're gonna compare. So what you do, a lot of times people don't necessarily track all their credit card charges throughout the month. Let me know if you do. But typically most people wait till they get their statement and then they enter the credit card charges and reconcile it. Is that what you're doing? Let me know. So what you're gonna do is, I wanna show you before I show you how to reconcile in the next step, I wanna first show you what happens on your balance sheet. So what a lot of people don't understand is they say, where does it show that I owe the money when I'm entering the credit card charges? And that is going to be, so the expense where you're spending the money shows up on your profit and loss because that's your income and expenses. But where it shows you owe money is going to be on your balance sheet, which is assets, liabilities, and equity. And as I said, this is my sample file, so it's kind of long, but we're going to scroll down to the liabilities and you're going to go down to the credit card and you're going to see what you owe the credit card, $250. Based off the transactions we just entered, the fuel and the job supplies. Does that make sense? Are we good so far? I see the chat. Somebody's chatting, so I'll look. Oh, hi, Linda B is here. Very happy with QBox. Yes, Linda is part of our community and she learned about you guys last time. Okay, great. I wait until the statement comes. Yes, most people do. It's the easiest to make sure you're doing it correctly. So this is how you enter if you don't want to use the enter bills feature in QuickBooks and pay bills. So I want to take a step back. I just showed you how do you enter your credit cards properly where you track each individual transaction. That's one way to enter your credit card charges. Now, another thing to know is commonly I get asked, okay, Candace, but what do I do when I entered a bill and I want to pay my bill with a credit card? Do I go up here under banking and enter my credit card charges? And then won't it be entered twice? Yes. What you do with those transactions is you first enter the bill that you want to pay with your credit card. If you're using enter bills, which gives you accounts payable, right? If you don't know that, that's the benefit of the enter bills feature, is it's a two-step process, but it gives you additional reports. Under the vendors, you get accounts payable, like who do you owe money to? So what you're going to get is you first enter that. Then if you actually paid that with your credit card, you're going to click pay bills. Okay, so this is how are you entering your different credit card charges so that they show up for when you are going to reconcile your statement. So let's just say we're going to pay Candace. This is some little sample I created for you guys. So we're going to enter that we're paying Candace. We're going to pay her for the amount because she has a bill. Then we're going to go down and we're going to say what is the date that we're paying. We're going to pay it on the 15th, even though, and then we're going to say we're going to pay with, and this is the key to making it all work. You need to check credit card. And then over here, you're going to select which credit card do you say you paid it with. Once you've done that, you're going to click Pay Selected Bills. And it's going to say, yep, it's all done. Okay. Now, when we look at that same credit card, either in the bank statement or directly in your chart of accounts, you can also look to see where is your credit card sit at. Move my face out of the way for a second. The Bank of America, now we're at $400. So inside, we've been entering charges. We entered some as a direct credit card charge. That's why they say CC. And we did one as a bill payment, and that's why it says bill payment. Does that make sense? Is everybody good so far? That's how you can enter your different credit card charges. So first, you're going to go in, you're going to enter your credit card charges that match your statement. Once you feel you've entered all your credit card charges and you've entered everything in properly, now you're going to reconcile. And you want to reconcile every month all your bank accounts and your credit cards. This is the way you know everything matched. So let's just say that this is a piece of paper. This actually has my notes for today, what we're going to talk about. But let's say that this is your paper from your credit card company, the statement. It's going to say, you know what? Hold on a second. I actually want to pull a credit card statement because what's interesting about credit cards is they don't say the same thing as a bank statement, and that throws people off when you go to reconcile. You can let me know if you've had that problem. So you get a statement from your company and it's going to say a new balance. And then it's going to say your previous balance. And that I've noticed people ask me that question often, like, what is the difference? So between a bank statement and a credit card statement has slightly different verbiage, but in QuickBooks, they didn't change it for you between the two. So you got to kind of learn what each of them means. All right. So first we're going to reconcile together. So you enter all your charges. Now you go into enter to actually reconcile. Let's see. Somebody's chatting. Some vendors don't okay. accept credit card. When that appears, I have to use a non-business credit card. Do I need 2 business credit cards? I would. It's better if you don't commingle your personal and your business. I would get a separate business credit card that is accepted in more places. So we're going to pick our credit card. So this example is Bank of America. And if you've never reconciled your credit card, the beginning balance is always going to be 0. Don't worry about that. People freak out. They're like, oh, it says 0, but it really wasn't 0. How do I fix it? Don't worry so much about that. We're entering today as if it already had like we're not worrying about the beginning balance, but typically you can start it and you can add a beginning balance if you need to. I can show you how to do that if you guys want later. You can let me know. All right, so we're going to pick our closing statement. So let's say our closing statement is today the 15th, just for convenience, and we're going to hit an ending balance. So do you remember what our ending balance was? It was $400. That's what the chart of account said. But what you're going to look at is you're going to look at your actual credit card statement. And you're going to see the new balance, even though QuickBooks technical term is ending balance. Write this down if you've been having a hard time with it. New balance is typically what a credit card statement says. Okay. And usually previous balance is what your beginning balance is. And then you're going to click continue. If you haven't already pre-entered your finance charge, I typically recommend actually doing that when you're entering your credit card charges in the enter credit card charge screen. But if you didn't do it, you can enter it here. Okay. So let's hit continue. So then you're going to come in. Okay, I was just looking to see. I'm like, what is this? I did this wrong. Oh, no, I didn't do it wrong. I did it. I was thinking it was a payment. I'm like, wait, it's showing the payments in the wrong spot. I'm jumping ahead of what I want to be teaching. Okay, so we're going to go in, and on the left side, when you go in to reconcile, you're going to see all your charges, and you're going to match these to your statement. So you're going to go, yes, I did a $50 charge at Exxon. I went to Home Depot, and I paid Candus Kampfer in this example $150. Okay, so it's going to say, we don't know, we didn't have a beginning balance, and we haven't made any payments yet on our statement. So it's going to say $400 is our ending balance. If you have payments, they're going to show up to the right. And I'm going to teach you how to enter a payment in a moment, and then we'll come back in and reconcile again. So you can see kind of the whole process. So the ending balance is now $400. If ever you never want to balance, you never want to click reconcile now if the difference is anything other than 0. It always needs to be 0. Because if it's not and you have some other difference, then you probably have a mistake. It could be your beginning balance or your ending balance, or you entered something in wrong. Okay, it's one of those options. One of the things I love about this screen is that the beginning balance, you usually match that to your credit card statement. You'll have one. And then you're going to have your payments total and your charges. And you can actually match that up to your credit card statement. It'll have a summary on the front page. And you can just look to see like which one is my mistake. Did I enter the charges wrong, or is that correct, but I made a mistake on the payment? Does that make sense? You look at the summary total to match. Okay. Then you're going to click reconcile. Now this is where people get a little funny, like where the problem happens. QuickBooks only looks like it's giving you an option to write a check in this moment or to enter a bill. And so people typically select one of these. You can actually choose to click cancel. And that is actually what I typically recommend you do, unless you need it in your accounts payable to show up in your reports because you want to know how much you owe or somebody wants to know how much you owe. If that's the case, you can enter a bill. But what happens is if you don't pay your credit card off every month and you move it from what's considered a credit card amount that's owed to accounts payable, but you didn't pay that full amount, the next time you come in here to reconcile, the bill is going to show the full amount. You know what? Let's actually do it because I think it just make more sense if you can see it. So I'm going to act as if this is what I need to do. But what I teach you to do is actually hit cancel. But I'm going to do it, walk you through the steps. So let's say you hit, yep, I want to do a bill, and you click OK. And now QuickBooks is going to come in and it's going to create a bill. It also asks you, do you want to reconcile and run a report? You can choose to do summary, detail, or both. I typically at least do summary, and then I print it. Okay. So you're going to choose to say, I owe my Bank of America credit card. So Bank of America is your vendor there, who you owe money to. And Bank of America credit card is also where you want to put the money that you owe. So this is just going to, what it does is this, and when you do it this way, it moves it from the balance sheet. So as soon as I hit save and close, it's going to move it. But I want to show you what it looks like first. Then I'll show you what I recommend you do. Okay, so right now our accounts payable is $50, and right now our Bank of America credit card, we owe $400. As soon as I click save and close, it's now going to show that our accounts payable is higher. Now we owe $450 in accounts payable, and look, it shows we don't owe anything in our credit card. The benefit of that is it will show up on your vendors reports and accounts payable. It's going to say, oh, you owe it, and people are like, yes, I did it right. But then let's say that you don't have $400 to pay, and you're only going to now pay in your bill, like you're out of your bank account, you're going to go along, you're going to pay your credit card, and you're only going to pay $200 because that's all you have this month to pay. Does that make sense? Are you following along? Now, the next time you go to reconcile and you only paid $400, you know what your reconciliation is going to say? Let me select the credit card so I can show you. Let's see. I see somebody's commenting. Let's see what they say. Yes. So after entering charges, do you write the check? I'll show you what you do. I actually hit cancel unless you're paying in that one. So let's say that now we say we only owe $200 on our card because we owed $400, we paid $200. Look at, people are going to come in here and they're going to say, okay, you know, I had a credit of $200, but then they're going to go, why does it show $400 payment, Candace? I didn't actually pay $400 on this payment. I only paid $200. How do I fix it? Because the next time you go to reconcile, it will not work. So if you're insistent that you want to use the enter bills feature, but you don't pay your credit card off every month, what you need to go back and do is change your bill to exactly the amount you paid, which was $200. Sometimes you don't know what you're going to pay till later. That's fine, but you need to go back and make sure that your bill matches the amount you paid, or your credit card will never be able to be reconciled properly. If you pay your credit card off every month and you like the enter bill feature, you can do that. But I find that most people, that messes them up. Does that make sense so far what I'm talking about? So what I typically recommend doing is, I'll show you, I'm going to check mark this and I'm going to click reconcile. What I typically recommend, if you're paying the bill in that moment, write a check. But if you're not, there's an option most people don't know about, which is hit cancel. And I'm going to close. And what it does is it just leaves it there, ready to be paid. Then what you're going to do is you're going to write a check when it's time to actually pay your credit card. You're going to choose the credit card that you're paying. You're going to choose the amount you are paying. And then you're going to come down here in the account. This is where other people get messed up, is when they go to write the check, they say, okay, I wrote the check for $200 and it's for these expenses. And so I'm going to come in here and I'm going to say it's for job supplies and it's for fuel and it's for da-da-da-da-da. No, you already did that when you entered the charges. The key to making it work is you're going to choose to pick up your credit card here and hit save and close, and it will actually be applied to the credit card instead of where you spent the money. And then it will just sit there on the balance sheet. If you don't enter a bill, it'll sit there on the balance sheet waiting to be paid. So if when I cleaned it up, it's still going to show I owed $200 because I left it there, or your $400. And then when you actually write the check for the $200, it will actually pay it down by $200. Does that make sense? This says I already have. I'll make this a different number. Convenience. Now you're paying the credit card and it'll actually reconcile. I thought this might be helpful too, because my friend was like, I always enter a bill, but then I didn't pay that amount. And for some reason, when I go to reconcile, it won't work. And I said, just don't enter a bill, or write a check when you actually pay it for the amount you actually pay it and code it to your credit card. She was like, oh, that's so much easier. That helps me. So I hope that helps you. Yes, excellent. Thank you. Thank you. Yes, makes sense. Okay, good. So that's what I came here to help you guys with today. I will take 1 minute and show you in your bank feed, because I didn't teach you the bank feed, but I just want to show you something real fast. And then I'm going to hand it over to Jamie because it's going to be her time. When you're in your bank feed, this is just a sample little feed I keep up. Make sure that you're picking your vendor and where you want the expense to show up, and then add your transaction in your credit card. And if you match your bank account first and where you applied the credit card first, then when you go to match your transactions in your credit card, everything will go a lot smoother if you happen to be somebody who is a desktop user that also likes the bank feed. All right, if you guys have questions, let me know. I look forward to hanging out. I am excited to hear what Jamie has to share.
Thank you so much, Candace, again. And as always, I hope, just to remind everybody, we'll send follow-up emails. So we'll let you know if you're not already familiar with them or connected to Candace and or Jamie. We'll send you information on how to get in touch with them. But thank you, as always, Candace. That was very excellent. It's interesting for some people like me that could be a simple topic, but absolutely it was, and that was very helpful. So I appreciate you going through that, so thank you. And again, we'll send you more information about Candace. She's an excellent teacher. Anything related to QuickBooks Desktop, she's wonderful at helping you to understand more how to use it. So we'll make sure to get you her information. And so we are going to transition at this point to Jamie. And I have to confess, Jamie, I was reading your bio, and I remember my old benefit days, how most employers had no idea all the things they had to remain in compliance for, including their postings. So I'm sure everything you're going to share with us is very applicable to any small business or medium-sized business owner, and the things they need to be thinking about at this time of year. So without any further ado, and I'm hoping you're there, if you can hear me.
I am here. Thank you.
Awesome. So I'm going to turn the floor over to you, and I think you were planning to share your screen to show us some PowerPoints you put together. So thank you for joining us, Jamie, and I'll turn the floor over to you.
All right. Well, thank you so much, Chris. And Candace, it was great listening to you. I learned a few things myself about QuickBooks, so always good to touch upon that. Basically, I want to start. I'm not going to be interactive like Candace was, but really what I want to show and share today, I should say, is, can everybody see my screen?
Yeah, I can see it. I think you shared it perfectly, Jamie, so I can see it. So I'm hoping our audience can also.
Okay, so what I'm going to share today and what we're going to talk about is really starting 2020 off right and what you need to do to prepare. So it's really a 2019 tax update, everything that you need to know about informational returns, and we're in the season for that. So we're going to talk about, filing with 1099s and W-2s, reviewing personnel policies, complying with poster requirements, managing employee performance, and cleaning up employee records. This is the great time of year to do this kind of stuff. You always want to start in your personal lives. You make resolutions to do things and start the year off right. So why not do the same thing in your businesses, right? You want to get your business started off right, and you want to make sure that you're always in compliance. So I want to first start by talking about filing 1099s and W-2s. We are in the heat of the season right now. We're in the midst of it. And the filing deadlines for informational returns are quickly approaching. So the deadline for 1099s with data in box 7, and box 7 for those that are unfamiliar, but I'm sure everybody on here is familiar. Box 7 is the non-employee compensation. So that's basically the form for independent contractors, anybody that you use that's a non-employee in your business. And that is January 31st. That's also the deadline to get your copies to contractors and file with the IRS. So you have two things to do. You have to file to the IRS and send copies to your recipients. And that deadline there is regardless if you're filing electronically or paper filing. So again, quickly approaching, we're at 15 days here, so you don't have much time left. Now, if you are filing 1099 for independent contractors, but you don't have data in box 7, you have until January 31st to deliver those copies to your recipients. But if you're paper filing, you actually have a little bit longer. You have until February 28th. And if you're e-filing, you get even longer. You get until April 1st, which is a whole extra month. So you want to actually make sure that you're getting things started. And the best way to do all that usually is to start it in at the end of the previous year, I should say, checking all your information. So for all other 1099s that you're filing, whether it's a 1099 1099R, 1099B, whatever it is, you have to get those forms to your recipients by January 31st, and then paper filing February 28th, and e-filing by April 1st. The deadlines for W-2s, now we're talking about employees, those deadlines actually match what you have for independent contractors in your 1099 miscellaneous if you have information in box 7. So you need to get those forms to your recipients by January 31st, and paper file, or if you're e-filing, to the IRS on the same day. So again, those dates are quickly approaching, so you want to make sure that you're getting those all together. Now, what you don't want to happen is you want to meet those deadlines so you don't have to worry about this screen that we're showing on, that I'm showing right now, and that's the increase in penalties. So, I'm going to briefly touch on this, and penalties have been adjusted for inflation. The amount of penalty is actually based on when businesses file the correct information return or furnish the correct payee statement. And that's that gets confusing to business owners because they think, oh, well, I filed the form and everything's good to go. Well, if you filed the form on January 31st or you furnished it to the payee, your contractor or whatever, but that had incorrect information, then technically you did not meet the deadline because the determination of you meeting the deadline is when you file that correct form. So that's why it's so important that you make sure all your information is correct and you enter it correctly on the form so that you're meeting the deadline and it's filed correctly. So the penalty for actually not filing a correct form is separate from the penalty for not providing the correct payee statement. So if you don't file a correct form with the IRS and you don't provide a correct form to the payee, then you could be subject to 2 separate penalties. And as you can see from the slide, I'm not going to go over each individual penalty, but those can add up very quickly. And for a small business, that can sometimes mean the business. So there's the importance there when you're filing to meet those deadlines. Now I want to talk about an opportunity. If you're in a crunch and you want to avoid potential penalties, then really electronic filing is the way to go. It's faster, more accurate than paper filing, and eFile for Biz actually offers end-to-end services that can really save you time. So an example of some services include electronic filing with the IRS and Social Security Administration, printing forms at a facility that's specially certified by the American Institute of Certified Public Accountants, so AICPA, mailing copies to contractors and employees via first-class mail or by e-delivery, so you don't even have to worry about mailing. It just goes electronically to them. And then eFile for Biz also offers additional features for maximum efficiency, and that could be multi-payer setup if you have a lot, especially if you're an accountant, you're working with multiple clients. It offers 1099 corrections, and it has multiple options in order to input the information via Excel. It does work with QuickBooks Online, and then it also works with other APIs like for Xero. Now, just a note, I do want to mention before we move to the next part, in case you haven't heard, and I hope you have, because this has kind of been the talk within the last year, and it's going to get even bigger as we move forward. The e-filing thresholds will be lowered significantly over the next 3 years. And what that means is that more and more businesses, and smaller businesses at that, are going to be required to e-file their forms. So paper will not be an option anymore. And this is actually due to the Taxpayer First Act, which was signed in July of 2019, so just recently last year. This year, however, the threshold does remain at 250 forms. However, next year when you prepare to file for 2020 in 2021, that threshold is going to drop to just 100 forms. So if you're a business that files 100 forms, you are going to be required to e-file. And then in 2022, it'll drop down to just 10 filings. So as you can see, it's very important, to even get ahead of the rush so that you're prepared when the threshold comes to meet your company's demands. Okay, so, in addition to tax, like I mentioned, and like Chris mentioned, there's a lot of different compliance things that you want to make sure that you're doing and it's happening in your business throughout the year. And another thing, I'm going to talk about a couple other things besides tax here to make sure that your business is in compliance, and some options that I may even bring to your attention, I should say, that you may question and kind of want to get more information about. And that's really what we are here at ComplyRight and our family of brands to help small businesses with, is make sure that you are in compliance in your business. So you don't have to worry about that part. We can help you take care of it, but you can worry about running and growing your business, which all businesses owners want to do, right? I'm sure we're all in agreement there. So we're going to talk about now reviewing policies, and we're going to talk about employment policies. It's the beginning of the year. It's a great time to review your company policies and really make any necessary updates. So we're going to talk about 5 must-have policies for every business, and we're going to cover 5 trending policies that you may also want to consider adding to your handbook if you don't have them. So the first policy is at-will employment, and this basically generally falls into 2 categories. It's either employment is either contractual or at will, and if no contract exists, then that's when it's considered at will. Now this means that employment can be terminated at any time by either the employee or the employer, and that could be for any reason or no reason at all. Now, the only limitation to this is termination for an illegal reason, and that could be like discrimination, for example. So you really should have your company's at-will employment status documented in your handbook and acknowledged by all employees. You want to make sure that that happens. The next policy we're going to talk about is payroll. So this policy should include definitions of exempt and non-exempt employee classifications, as well as details on your pay periods, pay days, overtime authorization rules, any meal and rest break guidelines that you have. And you also want to make sure in this policy that you explain how payroll deductions are handled for time off. And this will, most likely defer for exempt and non-exempt employees. Again, having these policies are also going to help manage a lot of questions that your employees are coming to you about every day, where you probably feel like, oh, I answered that question yesterday. But having this information in the policies allows you to say, refer to your policy, and allow you to do the work that you need to do to run your business. Now, our next policy is time off or PTO, and a solid time off policy really will cover expected work hours, attendance expectations, and even paid holidays. And it should also answer these common employee questions. Do I have separate sick days and vacation days? How does my time off accrue, I should say? When can I start using it? What happens if I don't use my time off? Does it roll over to the next year? And then what happens if I leave the business or I'm terminated or I quit, whatever? Do I get that paid out or do I lose it? Our next policy here, number 4, is the rules of conduct policy. And your conduct policy, what it really does is set expectations on everything from dress code to customer interaction, even to the personal use of company equipment. And in addition to laying the ground rules for your workplace, your conduct policy really should include this phrase. And it should say, and any other management rules. And the reason why you want to make sure that it includes that is because it covers you if a rule is broken that is not specifically listed on the policy. You can't predict everything that's going to happen in a business, so you want to make sure that you cover yourself broad enough. And our last must-have policy that we're going to talk about here in this section is the EEO or harassment policy. And this actually prohibits discrimination and harassment of any kind. Obviously, all businesses should have a zero tolerance policy. And depending on the size and location of your business, though, it may be illegal to discriminate or harass workers based on gender, race, age, sexual orientation, sexual identity, or political affiliation. So really, now is the time to check your local laws. You want to make sure that they're covered in your policy as well. And your policy should specifically state that all types of harassment are illegal and forbidden, including sexual harassment. Our harassment policy really can help protect you in court as well, so that's why there's importance there. And in your policy, you want to make sure you include language on how to report a concern, provide information on 2 points of contact within the company, also incorporate an anti-retaliation statement, and then include this language as well. And you can see that on the slide there. You want to state, we will keep your complaint as confidential as possible under the circumstances. You never want to guarantee confidentiality because it depends on to what extreme that you have to, investigate further, get to know more information, share it with other people so that you can figure out exactly what needs to happen or make sure you take care of the situation. So those were the 5 must-haves that you have. Hopefully everybody that's listening in here today has those policies. If not, maybe you'll look into it and start implementing. But here are some 5 trending policies I want to share with you as well. And I want to share some information as well. A small business compliance survey that we did here found that 84% of participants have an employee handbook or formal written policies. 85% require employees to acknowledge receipt of those policies, but 56% don't have a formal weapons policy in the workplace, and 47% don't have a social media policy. And as you can see, 2 of those policies are listed on the trending policies that we have here. And, today's workforce is really changing. Employee manuals, they need to reflect the shifts that are occurring. And addressing those latest workplace trends can help businesses set clear boundaries, prevent misunderstandings, and even ultimately protect your business itself. So the first policy we're going to talk about is remote workers. That's essential for companies that allow employees to work from home or some other location outside the main office. Next up, and that's very trending, we have a lot of remote workers within companies nowadays. Next up is bring your own devices. And as more and more employees use their own devices for business, these include smartphones, laptops, tablets, then you need to consider privacy and security matters of those devices that they're using. And there's also concerns of devices being lost or stolen. Because if they're doing work on their own personal device, where's that information going when they're at home or they're not in the office? Things like that. Now, one of the things you'll want to address when you're talking on the bring your own device policy, though, is non-exempt or hourly employees that use their own devices to access work at home or when they're off the clock. This should definitely be prohibited and specified in your policy, though, because all work that's done by non-exempt employees should typically be paid. So you want to make sure that they're only doing work on the clock if they're bringing their own device and using it at home or anything like that. Now moving on to trending policy number 3, social media. A social media policy really outlines how an organization and its employees should conduct themselves via the web when they're using it, how they're representing themselves and associating themselves with your company. It really helps protect your company's online reputation. Now, although a social media policy can help protect your company's reputation online and beyond that, you should draft it to withstand scrutiny from the National Labor Relations Board. So you want to make sure that you're in congruence with what they're saying on there. And they give a lot of advice on the NLRB website to guide you in that area. So our 4th one here is drugs and alcohol. This is definitely a hot topic right now due to expanding laws legalizing marijuana for both medicinal and recreational purposes. And marijuana is still against federal law, so you can prohibit it and you can test for it. That is actually perfectly legal, but at the same time, you have to be mindful of the state laws that may allow more employee rights. And then lastly, we have the weapons in the workplace. Under OSHA, employers do have an obligation to protect their employees from workplace violence, and that may include physical violence, harassment, intimidation, or even disruption. And, that's something we see all too often. So it's a great thing that you have in your, that you should have in your policies in your company to let your employees know that you think about that stuff, you care about them. And you can address weapons and violence separately or combine them in one policy. And one final reminder I do want to make before we move on, employees should be required to sign an acknowledgement that they've received all their policies and they've read and understood the content. You always want to keep a copy of the signed acknowledgement in the employee's personnel file because that can protect your company should anything happen later on or you have a lawsuit or anything like that. So Thinking about company policies, maybe you have some of those policies, maybe you don't, but I do want to share with you where can you get those policies. You know, if you don't have an employment attorney or anything, you can actually get the policies that you need for just $90 a year. You can create an entire employee handbook or just select the policies that you're missing. And by using the Company Policies Smart app, that helps your business create, manage, and share attorney-approved employment policies in minutes. The policies that are in the app are created by employment law attorneys. They comply with both federal and state laws. All you need to do is select your state, and you receive access to a library of federal and state-specific policies that are written by legal and compliance experts. And all of your library of policies, as long as you have that subscription, are kept up to date and compliant. So anytime anything changes, you will be notified, and we'll make sure that you have all the up-to-date policies. So now let's talk about complying with posting requirements. This is labor law posting compliance. This one topic could easily be an hour itself, but the new year is really a good time to get your posting compliance under control. One, because minimum wage may be changing, but labor laws also change all the time. So, you know, most employers do have to update their postings 2, 3, or even more, 4 or more times a year, and it's not a one and done situation. So first things, the posters that are probably hanging in your break room have a very important job. You may think that they don't, but they do. They inform your employees of their legal rights under federal, state, and local laws, and failure to comply carries risk. So you may be thinking there are no poster police that come around to say if I don't have the right posters up, well, I'm not at any risk if I don't comply. Well, it is true, fines really happen with that, but occasionally an agency will levy a fine, and that's usually during an unrelated investigation. However, that's not the real risk. The much bigger danger really is an employee lawsuit. Because what happens is not posting can be considered bad faith in a legal dispute, and even more alarming, when you're not posting, that can actually extend the statute of limitations in certain cases. So what that means is a lawsuit that would normally be allowed to proceed because it was filed too late actually may be permitted to be continued because the employer never informed the employee of his or her rights and responsibilities. So that's where you really want to make sure that you have your up-to-date postings. So what are your responsibilities? Federal law requires all U.S. employers with at least one paid employee to display 6 separate notices. The FMLA, posting doesn't typically apply to employers with fewer than 50 employees. Smaller businesses only have to post 5. And then beyond federal postings, you're responsible for additional state postings. And depending on the state, this can add up to 15 additional postings or more. No 2 states have the same requirements because each state operates its own government agencies and they pass their own laws. So it depends on what state you're doing business in. Now, beyond the basics, there are other posting requirements that may apply to your business. You may be required to display certain postings in Spanish, even if you have no Spanish-speaking employees, and you may have mandatory city or county notices that you're required to post. Now, labor law posting compliance, it's complex and unpredictable, and even a small business can have substantial requirements. And really, you know, contrary to what some people think, there is no one-stop shop for posters. Government agencies typically don't work together, and they almost never inform businesses when laws change. So really, in order to stay in full compliance, an employer operating in a single state has to monitor as many as 9 federal and state agencies, and that's not even including local requirements. So again, businesses, you're trying to run a business there and now follow 9 agencies. So as an employer, you face obviously a ton of different ever-changing labor regulations that are issued at all levels, and even increasingly at the local level. And the Poster Guard One Smart app, a solution to help you with that, lets you maintain compliance with those requirements through one simplified online resource that is focused on your company and your specific location. And then Poster Guard One also provides you with laminated posters covering all the mandatory posting requirements that are shipped right to your door when the regulations change. So they'll keep you up to date 365 days of the year. The posters will never become out of date. They monitor all regulatory agencies, and that includes more than 20,000 cities and counties. And in addition to postings, many agencies actually require employers to provide additional handouts to employees upon hiring or based on specific requests or actions taken while they're working for the company. So any handouts that are applicable to your business location are also provided with the Poster Guard One app. And that's along with simple instructions about how and when to use them. So all you really need to do is print and distribute them to employees whenever needed to make sure that you're in compliance. And this app here only costs $90 for the year for a small business. So number 4, quickly as we round things out here, is managing employee performance. Obviously, it's a great time at the beginning of the year to revisit your employees' goals, update or modify them if they no longer apply. And this is going to ensure your team is all working on the most important tasks so you can achieve overall business objectives. You really want to have a system in place for documenting behavior, particularly any disciplinary issues. And although it's important to document good performance as well, continuous documentation throughout the year will give you the input that you need when it's time to get ready for performance reviews. And you want to make sure that you start off on a good foot at the beginning of the year. Now, managing performance doesn't just happen at review time, though. You want to have a record that you can go back and look at. So you want to check in with your employees regularly, give them feedback on their progress toward their goals. You might want to meet with them weekly, monthly, or even every other month. But whatever schedule you decide on, you should really set the expectations with your employees now on the timeline, and then even format your check-ins. And then schedule them, time with them the entire year, and make sure that they stick to it. You have all the check-ins on your calendar if you do that, and that's going to help you make it happen, obviously. And then that will set your team up for success. Now, if you don't have a method for managing employee disciplinary actions, the Progressive Discipline Smart app really serves as a guide for building a consistent documentation process that would enable you to have smarter, more constructive conversations with your employees. I'm sure we can all admit those aren't the funnest conversations to have. They can be uncomfortable at times, but with the right tools and an action plan, it's really possible to turn around a bad situation. So you can take control of employee discipline with the Progressive Discipline app. It helps you keep your process fair and consistent, I should say. It helps you document the disciplinary performance issues, do follow-up actions, provide employee statements, and even possible consequences with that consistent statement to make sure you are treating all of your employees fairly. And then if termination is necessary, this documentation is critical in legal dispute, in the case that you have a legal dispute or something. So thorough documentation can prove that you discussed the issue with the employee multiple times and gave them ample opportunity to improve. And this is where everything will be kept in that Progressive Discipline. And again, that app is only $90 a year for employers. The last thing that we are going to talk about here is cleaning up employee records. If we constantly do that year-round, keep the records up to date, that's going to help the processes move forward, especially when it comes to what we talked about at the beginning, handling all of our tax filings. So if you're buried under paper files, depending on how you keep your records, I want to review with you how long you're required to actually keep certain records. So as you can see, we're going to talk about hiring forms on this screen. Everything really needs to be kept for a year except for employment contracts. Those files need to be kept for 3 years. Everything else, job postings, resumes, drug test results, and job applications, need to be kept for only 1 year. Now on to the I-9. This is a tricky one, but I'm going to try to make it easy, and as you can see from the sample, we have an example to look at. The I-9 form has to be kept 3 years from the date of hire or 1 year after employment ends, whichever is later. That is very confusing, so that's why I put an example on there. Say Fred is hired on November 11th, 2015, but Fred is fired on November 11th, 2018. What you do is you take Fred's hire date and add 3, and that becomes the same date as the date he was fired. If you take his fire date and add 1 year, that becomes a later date. So in this example, the form would need to be kept on file until November 11th, 2019. So again, 3 years from the hire date or 1 year after employment ends, whichever is later. And another one you want to talk about is financial records. As you can see from the list on here, W-4, W-9, payroll records, those all have to be kept for 4 years, and then receipts for business expenses, 3 years. You know, and as we just talked about with Candus, you know, you have receipts that you're dealing with, so hopefully you're keeping those for 3 years. And lastly, employee records. Performance evaluations, termination or layoff, promotion or demotion, transfer or training and benefit records. Those are all 1 year, 1 to 2 years, or 1 year after termination. And then FMLA documents is 3 years after the leave ends. So you want to pay attention to that closely. It's actually 3 years after the leave ends, not after the employee leaves the company, but after their FMLA leave ends, 3 years from that date. So one last piece of information I want to share with you to help you keep track of your records and keep those in check and compliant. If you are still using paper records, the Employee Records Smart App is actually a great way to start your migration towards digital. Make that transition. It's easy to use, web-based, and it makes managing employee information really quick and simple for you, again, so that you can focus on the other things to grow your business. You can get started in a few minutes rather than hours, days, or weeks trying to transition your information, you know, that big HRIS systems have. But once you get going, you can add the information and start using the features of the app at your own pace. And the Employee Records Smart App is actually completely free to all businesses. Use it as long as you like, and for many employers, as you like, and you will never be charged. So that's a great thing. I highly recommend that you check it out. And as you can see, the other apps that we talked about are actually on that platform, so you can add to your barrage of apps anything that you want, add them as you choose, but that's it. And I know that was a lot of information to cover here, but I want to thank everybody for listening, and it was great being here. Thank you, Chris. I'll turn it back over to you.
Thank you, Jamie. And I think, you know, more than anything, like you said, it's as a business owner, you have a lot of other things you really want to focus on, but these are all important, and they can cost you money if you don't take care of them, or you may have an issue with an employee. So that's fantastic that using a resource like yours, they can make sure they're staying in compliance and they check those boxes. So those are fantastic resources. And actually, Jamie, someone asked if they can get a copy of the slides. So maybe in the follow-up email, we can just figure out a way to get them in touch with you if they want to communicate further, if that works for you.
Yes, most definitely. We can share the slides. I can send them to you also if you would like to share them with all the attendees.
Okay, that would be great. So thank you very much again, both of you. Candus, as always, exceptional teaching. Thank you very much, and we'll have information how to get in touch with Candus for further training. And thank you so much, Jamie, for all that valuable information. It's funny, I'm sure a lot of employers just started sweating as they heard that, but again, the good news is they can use a resource like yours and be totally in compliance. And I think that's the most exciting part of it all, is they can partner with your firm to make sure they are staying in compliance in all those various categories. So anyway, so again, thank you very much to both of you. Thank you to everyone that was able to join us today for our January desktop time. We will be back next month. Our vendor guest will be Fishbowl Inventory. I don't have a guest to share with you, guest host yet to share with you, but we'll have more information on the website in the next couple of days. So thank you very much again to everyone. Thank you, Candus. Thank you, Jamie. Thank you to all of those in attendance. Hope you all have a wonderful rest of your day and get out to do something fun today. Take care of yourself, and we'll see you next month. Bye-bye.
Bye.
Bye.